Hey everybody. Morning. Hey Dawn, Goose, Rob, Terry, Sergio, Ed, Svenborn, Cliff, Mary, David. How's it going out there in Sedona? How's how's your lovely bride? She getting better? Back on her feet yet? Pauline, Craig, Kathy, Ted, Gary, Sabine. Hey everybody. Kimberly, my favorite subscriber in the house. And welcome everybody. Yeah. Can you believe that there's only 17 trading days or 17 closes left in the year? Just 17. We're down to I mean, after today and tomorrow, it's basically 3 weeks left. And then that's it. One for the books. So, anyway, Karen's here too. Yeah, I wore a special holiday shirt here. Merry Christmas, everybody. Yeah, Rongamert. Good to see you. Got my special shirt on got a special party I'm going to tonight. Welcome everybody. And yeah. Crazy times. Crazy. So with just 17 trading days left, what should we focus on, right? That's the big, where do you focus your effort? We've got FOMC with a potential rate change and listen to all the rhetoric weekend. The New York Fed, I don't know if it was Thursday or Friday, got out, did a speech, and the stock market part of X went ballistic over the weekend of, just echo chambering the fact that the New York Fed suggested that maybe we get some QE firing up, that maybe Powell announces some QE because of tightening in the system. Now, had we been paying attention, like I've talked about, the overnight repo markets have been telling us that there's some cracks, there's some problems, and they're trying to address this. So they actually had a hush-hush meeting with a lot of the big banks back right before Thanksgiving, if I got my timeline correct. And, well, there you go. Yeah, great work, David. Great work. And, it's a crazy shirt. There's a lot more to it than just what you see at the top. There's a lot more to it. And well, everybody, welcome. So look at your calendar. We have just 17 market closes left in 2025. 17 more days to potentially get yourself straight, finish the year on your own terms. If you're behind the plan, it's time to start looking at resolutions for next year. What are you going to focus on? How are you going to do it? What are you going to do different? What were your biggest Achilles heels of 2025? How are you going to fix those in 2026? And if you spent this year listening to mainstream media, the professionals, the hedge funds, the titans, the mutual fund managers, you've probably been hiding under your desk half the year. I mean, they've basically spent the entire year building a wall of worry, convincing everybody the sky is falling. The results, a pathetic 72% of them have failed to even meet the performance of the S&P 500 so far this year. The basic benchmark for the 500 largest companies in the U.S. outperformed 72% of big money managers. Why do people love to follow them? Don't even listen to them. I mean, it's kind of like these hedge fund managers were weathermen predicting a blizzard, and we had a heat wave instead. So let's rewind the tape on 2025, because the story of why they got it so wrong is a masterclass for the rest of us in maybe what we look for next year. This panic started all the way back in January with the DeepSeek Monday, when a Chinese AI company made the whole tech world think the AR party was done. We saw NVIDIA pulling back like 25% virtually overnight. And then in March, the pros got wiped out in what Wall Street calls the multi-strat Mageddon. Um, it was one of the worst 2-day stretches for hedge funds in years. They were already kind of running scared, and that little 2-day stretch in March kind of flushed them out a little bit. And then came April. On April 2nd, which the market dubbed Liberation Day, President Trump announced sweeping new tariffs. The professionals were already terrified, hit the panic button, and sold pretty much everything. The market plunged 13% in less than a week. And if you look top to bottom, that whole move was 100 points bigger than the COVID flash crash on the S&P 500 and only lasted 10 days longer, top to bottom, than the COVID flash crash. So we got a big pullback, even though that's not the top of the line story. It's just Liberation Day hiccup. But really, it was bigger than the COVID flash crash, or if you call it the flash crash, I mean, it's a COVID crash, you know. And while everybody was selling everything, so-called dumb money, that's us, retail investors, we were buying. And what happened on April 9th, the very next day after the market bottomed out, a 90-day pause on tariffs was announced, triggering the sharpest one-day market reversal since 2008. The S&P was, well, I guess it has notched 33 more record highs this year after that. The smart money, turns out, was at home clicking the buy button also. And it wasn't just you. Corporations bought back over $1 trillion of their own stock here in 2025. When a company buys its own shares, it's kind of like, I mean, it's the ultimate return of value to shareholders. They're betting on themselves, reducing the number of shares. There's multiple facets of this that propel the stock higher. Foreign investors also jumped into the U.S. markets in a big way, because the U.S. markets were seen as the safest bet out of all the global economies. And this brings us to the opportunities staring us in the face for the last 17 days and then heading into 2026. Goldman's top trader, John Flood, just gave us a playbook. This is Goldman Sachs. His number one idea isn't some sort of flashy headline-grabbing tech stock. It's actually the quiet AI revolution. He's talking about non-tech companies that now use AI to boost their profits. Think about, so like, what does that mean, right? Like, how do we wrap our head around what that means? So, first example, think of like a bank using AI to actually get loans approved faster. Instead of it taking weeks, maybe they can get it done in a couple days. Or possibly a retailer using AI to track their inventory instead of the old system that they've been using since the 1970s. Maybe they find efficiencies in managing inventory, things that we're selling, or things they need to get more of, or things that been overstocking, and they can keep ahead of that faster and easier. So they take less losses, make more profits. They aren't building AI; they're just cashing in checks from stuff that other people built. So from your watch list, Goldman bundled up these companies into a basket with a ticker GSXUPROD. That's and that's pretty wild, right? That's Golf, Sierra, X-Ray, Uniform, Papa, Romeo, Oscar, Delta. And you may have to Google that one. That's your homework right there. You can go look those up. Those are companies, traditional, boring type companies, using AI to cut out inefficiencies. Next, the Fed is expected to cut interest rates this week on Wednesday. For us, that's a screaming signal. When rates go down, companies that borrow money with variable interest rates suddenly they suddenly have lower interest payments, especially if they can take advantage of that. It's like your adjustable rate mortgage getting cheaper. That extra cash goes straight to profits, but it may not bring mortgages down. Goldman has a basket of these companies also. And it's GSXUHIFL. That's crazy ticker, right? But you can look up these Goldman Sachs baskets. And so that's Golf, Sierra, X-Ray, Uniform, Hotel, India, Foxtrot, Lima. And That's another one that you can go dig up, look into, see what's on the watch list. Now, if you're looking for even more, the report that Goldman put out highlights Brazil, which is benefiting from its own rate cuts and expected to be a very pro-business kind of election coming up. Like they're expected to get more politicians in there. They're very pro-business and very economic growth, and that kind of presents opportunity going into next year. It also points to the ongoing M&A mania. Oh, we've seen over $700 billion of deals, and M&A is mergers and acquisitions, but it's been pretty light. It still suggests that there are undervalued companies ripe for buyouts. And don't sleep on kind of the futuristic stuff. The massive power needs of AI data centers are creating a renaissance in nuclear energy. We've got companies like Cameco, CCJ, Charlie Juliet, and Centrus Energy, which is Lima Echo Uniform, LEU. They're fuel suppliers for the AI revolution. So no matter how this shakes out, they're probably going to expand their business. And Cameco actually owns a majority stake in Westinghouse Airbrake, which has one of the only small nuclear reactors that's ready to go today. It's already approved. It's got government approval. It's got the all the things, the NRC approvals, and it's ready to go, ready to deploy. They just have to make them. So those are able to be ordered right now. So what's the move for the next 17 days? Well, we see the pros kind of scared. The fear and greed index hasn't really come that far off of extreme fear. The wall of worry still sky high. Kind of a bullish signal. Goldman's official target for the S&P next year, 7,200. But, Mr. Flood, the trader on the front lines, thinks we could possibly hit 7,800 on the S&P. That's a nearly 15% upside from where we are right here today. As Nelson Mandela once said, may your choices reflect your hopes and not your fears. The professionals choose fear, or they chose fear this year, and they got left in the dust. You got 17 more days to maybe play hope, armed with the right playbook, so make them count. That's kind of where we're sitting right now as the opportunity right there. All right, let's talk about how we make money today. What's actually moving? What's actually shaking? What's going on? So all trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. So if you desire personal financial advice, hire and consult a financial advisor, just not me. So be careful trading. I like to trade. Be careful trading stocks, options, bonds, forex, futures, cryptos, treasuries, bonds. If you trade any of that stuff, you might lose money. It's kind of the way it works. Trading is a dangerous game. And when you check this out, right here. Now, FOMC, this kind of big event this week, and the government didn't put out the jobs report, and we probably won't get that until after the FOMC meeting. And jobs was the whole biggest concern last FOMC meeting, and we've had the government shutdown and all this stuff, and it's a hot mess. So it's ought to be interesting this week. The big rumor on X, announced last week, the New York Fed supposedly we're going to start some QE, maybe up to $45 billion a month in liquidity injection in the market, but it'll probably be different than what we've seen before. So keep an eye on that right there. What gets said, could be some chaos on Wednesday. Now, I saw some conversations and had some conversations over the weekend. There's different things cooking here. All right. I guess address the first thing in the room. My index trade, my daily beer money trade. I want to address that really quickly. Now, I've had some people talk, asking questions and talking about, do I understand the daily risk size and all this stuff? It's like, yeah, I did a lot of numbers. All right. I actually built an indicator that, um, wow, look at all this stuff. I love how they pile those up instead of just putting them on top of each other like they used to. So if you jump on here and actually pull up IndieX, I built an indicator strategy, whatever you want to call it, this time-based entry exit thing. And I didn't just I didn't just throw spaghetti at the wall. Like I didn't come to 130 just blindly. And I'm not just talking like there's one of you, I know specifically you'll think I'm talking to you. And this is not just one person. Like this is actually, when I say I know one of you, like you're going to think I'm talking to you. But I came to 130 very specifically. Now, I sent data to several of you over the weekend when you asked me about different time frames. And guess what? If you come in here in the last few minutes, there's still a lot of volatility. If you come in over here at noon, there's still, this actually buys 2% bigger moves than going at 130. By going an hour and a half earlier, by getting 1.5 hours of extra time, you actually buy 2% more risk in the market. Think about that. Why did I pick 130? It's very specific, all right? I ran a lot of scenarios. And I know, like when you look at the entire day, the moves can be much bigger. We can get 5% down days. All right, that's all in the plan. But this time period was very specifically chosen from 1:30. This is Eastern time, 1:30 p.m. Eastern to 4 p.m. Why not 2? 2 doesn't actually, like, it's basically the same risk, except you have 30 minutes of option decay, and they're very aggressive with the option decay here. Now, you could wait till 2, but the moves are almost the same. Like, generally from 1:30 to 2, we don't get much move. And then it's very specifically picked, 2.5 hours. I didn't just make this crap up, all right? In fact, when you look at the tool that I created, I have the ability to test it by the minute right here. And basically, all this does is grab what's the move from the entry time to the exit time. And when you look at that, and this has only got, the last 3 months or something like that, right now, it's negative. Actually, have to look at the trade analysis. It's a very specific thing I figured out here. Right now, the last 3 months, we've been averaging down 4 points. Over the last 5 years, we averaged up about a half a point. But that average kind of tells you what's the average move right there. So I did this on a lot of time frames. Like, where's the optimal? But it's not just the move that happens that's important. Where does the time decay kick in? Somewhere right around this hour. This is just based on empirical testing. I don't have back test data to show you. It's empirical testing. And me trading for years and years and years. Empirical means I put money in it and tested it. All right, that's all. That's a fancy word for I actually did it. Right in this hour is when the premium goes from being really high to start sucking out. Now, sometimes they start a little early. Sometimes they start a little late, especially when the FOMC is kicking in at 2 o'clock. So some days you see that premium really start eroding out of here. Other days it stays high, stays elevated, well into 2:30, sometimes even 3 o'clock, and then it really starts sucking out. So if you play that beer money trade, be careful. All right. Be careful. That's one of the important points I want to make here. I didn't just, it's not just a guess. All right. I don't like losing money. Any of you that hung out with me long enough, I don't like to lose money. So, and Dollar Tree hitting the target, pulling back. I've been on that trade for a while. I might actually keep the shares. That'd be crazy. I got another week and a half to go. Well, I guess got till the 19th on my options. 125 is the strike. We'll see what happens. And looking at ES, let's see what's cooking, what's shaking and baking. We're still kind of banging our head. Now, this gives me some caution here. Coming into that FOMC meeting on the 10th, I mentioned if we are elevated, if we're right up here, opens the door for that kind of reaction. And right now, it looks like we're just going to hang with our homies right into this. So be careful. We might see a big negative reaction. Could always pop out. I have no monopoly on, forward predictions. It's just seen this before. See how we kind of ramped up quickly and we're kind of slowing down into that resistance right there. It's a big fat resistance zone. That can bring this, and then we can do that. So I'd be very cautious trying to be aggressive into the FOMC reaction on Wednesday, 2 p.m. Eastern. Set your alarm. NASDAQ kind of has the same sort of crap cooking, if you will. This is so far lower high, lower lower, and can bring a bigger negative reaction. I don't expect it to go lower low, but it can always happen. Now, this is one to watch if for some freaking crazy reason we get a pop all the way up here before FOMC on the 10th. 10th at 2 p.m. If for some reason we get that crazy pop up there, that really sets up the market to pull back. I do apologize. There's still construction going on downstairs. Sounds like they're beating on the floor underneath me. And oil tried to break out of the downtrend and reject it again. Try to break out, pushing back down. Now we have this little baby uptrend of lows. Now if we break down below that, that sets up the opportunity to come retest these lows. And if that doesn't hold, well, probably going on down to the low 50s. Low 50s makes sense. Low 50s is what this is gunning for. It's a bearish pattern here. Probably going down here. It's like when? It might not happen until Q1 next year. Like this has been a very slow bleed out. And if we go on the trend line, it may not happen possibly to Q2 next year. If it just keeps on the trend line here. Price can do this till we get down there. Gold providing some disappointment here. That was like the flattest couple days of gold I've seen in a while. I mean, look at that chart. Like gold hasn't just done like 4 little dojis in a row practically all year. Yeah, I don't see any other instance of like 4 days. Maybe that little guy, but that was still more movement than what we got. So if you did the gold rush trade, right time to bail. You could hold on for a pop, but it's not looking the strongest right there. Bitcoin, so far so good. Holding on to this. We potentially have a like a little baby 1, 2, 1, 2. If we can break on out, get that 3, 4, 3, 4. The problem here that this is done. This is an important point. Not very happy with this right now. This 1618 of the first pullback, that first move right there, that 1618 is at the 618. And this one, when you put it on there, is also right there. For anybody that's been with me a while, when you do several different fib levels and they all come out at the same place, that could be a major resistance we can't just jump through. So watch this. When we do this low, this high, this low, that 618 comes out in the same exact place right there at 106. That could be a major. I mean, it's this fib line and that fib line, this pullback and that pullback all play out right here. And then this pullback coming up for that resistance. This could be an A wave down, a B wave start, or possibly even a 1 and a 2, and then crypto winner. So now this has me concerned. Right there, 106 is now a very, very, very important level. Right there. If we stop there and turn down with gusto, break down below the 618 of the move up from this low back here in November to whatever high we hit at 106, break down below the 618 there, no bueno. Not good at all. So this is, if we don't even make it up there, if we just turn down at 96, well, no good. Niche Keats. No good, no good. Now, Ethereum looks a little more sunny here. I would really like to see this get some continuation. Have a nice potential. Get back up in the 3,800, 3,900. This actually has a very nice. This first move up in the retrace doesn't quite have the confluence quite as bad at the big 618. Clean this up just a little bit. We didn't ever break out there, so just take that off. We have this high right up here. We have this low right down here, and we have this 618. But there's only one of those 618s hanging out with it. The other one's hanging out down here. So this actually provides a little bit more bullishness where this can rally up here, pull back, move on up through, and get some upside going. So this gives me hope that we're not in crypto winter yet, but time will tell. NKD. And there's a lot of other crypto charts that look really bad. So this has met the wall at the 618. First move down, retrace. If we cannot get through that, probably going on down, roadmap line. And this may be all setting us up for that flush out on the 10th, starting on the 10th. We can see this react in sympathy, be brought down by the U.S. markets, not the other way around. Usually this is an indication of global liquidity, but it could get, especially if this starts down between now and Wednesday at 2 o'clock, we start seeing this push down, it's kind of like a forewarning that we're going to see a bigger flush out in the U.S. markets. Dollar still hanging right here at 99. We get below that 98.5. I think we're going back down, making a lower low. Sounds like they're beating on the floor with a sledgehammer. And then, they're trying to chip something out of the floor because I just heard a bunch of pieces of concrete fall. Crazy. Anyway, Apple rejecting off of that 1618 right there at 284. That might be a top until we come all the way back down in here. If we get a bigger flush out, be careful. Big Tech has this set up like this right here so far, making that shoulder. We're right back down below the neckline. This might go on a bigger spill here for Amazon. Google still hovering, wants to tag that 337. I just kind of been feeling it. We want to go tag that, and then we may embark on a bigger retrace. This zone right here may be what we test, 240 to 260 on the pullback. Meta potentially has this bottom in place. I'm looking for this to do like a 618 retrace. That would be the most ideal thing. And I would probably buy METU if it did that. Why METU? Because, well, it doesn't have a timeline to it. Microsoft did, look at that beautiful thing. I want to see Meta do this. See that move up, that retrace, held the 618 right there. That's what I want to see Meta do. Hold a retrace. And now if we can break out, this is probably going to another all-time high. 565 is the target right now for resistance. We came up shy of that back here in July. We want to see it actually hit this time. NVIDIA, still churning in here, may take another stab at the breakout from last year. These highs, we broke out, we haven't really back tested that breakout at all. So we may come down here, take a slice through the roadmap line, come down and retest this breakout back here. Now, if we can get through the 618 up here, see, we kind of rejected that up here, that spike up and flush back down. We rejected this level. If we can get up through 195, probably going on out. New all-time high up there around 220. Tesla, it's trying its darndest to hold on to this breakout. Got through the 618 last week, retesting that like resistance zone from the top. As long as we can hold on to it. Short-term targets, 490, 500. Bigger targets, 550, 550, and up to 600. And there's no timeline on this. Like, it could take well into next year to do that. Netflix pushing on down. Not my favorite to see. I was hoping we could hold that 98. Looks like going a little deeper. Could come on down here to 94 before we find the bottom. I took a small stab at it last week, trying to pick the bottom. Turns out, not the bottom yet. We shall see. Here's the low, here's the high. And this move down is getting a little extra spicy here. We had some confluence at that 98 level. So this may be just ripping a few people, and let's do a quick little check here. Yeah, 6, 8, 4, 5. Move that down here. Yeah. Don't really expect it to go much below 95. Kind of expect that. I expect the floor right here. Now, if it does get a little crazier, the next floor is going to be right down in here, which not far below, right? Come back in where we chopped in here, coming into this year. Could take it right back down in here to find support, somewhere around 88. I saw somebody saying something about MSTR. I don't see a... don't see too much on that one right now. Possibly that made a, they call that like a, I don't know, some sort of baby bathwater candle, whatever. And that's a rare candle that's usually bullish. So watch out for some upside on MSTR. If Bitcoin can turn, that'd be great. If it can't keep it together, the downside very potential for like 140 down here. And this is not today's list. Let's actually refresh. The Leap Christmas Edition. There we go. Carvana getting announced. It's going to be in the S&P 500. Crazy pop right up to the target. There was the entry. There's the target. That trade is done. Check plus plus if you took it. Great work. Beautiful. Almost too easy. Other ones get listed in the Comfort Systems, getting put into the S&P 500. Getting a nice little boost today. That one's already played out. Probably going to get a retrace. And the other one on the list, CRH. And that's up to a new target on a bounce. Boom. Entry was back here. Right in Thanksgiving week and right up to the target. I played out. Didn't actually touch, so I wouldn't have actually jumped on it, but there was your signal. This was a 4-hour bounce because the daily didn't actually touch. And give you a couple days, and then boom, right up to the target today. So if you grab that one, done. Done, done, done. So Carvana, watch out for the pullback. There's some people predicting that this will be the fastest company to go bankrupt after getting listed in the S&P 500. I don't know. They've been buying dealers and turning them around. They bought like 5 actual real deal dealers and turned them around from being the worst performing stores to the best performing stores in the country. So that does bode well for getting their crap together. And then TGO, this is a split piece of garbage. I wouldn't touch it. Wouldn't touch it. KYMR. Boom, right to the target. That was beautiful. That was a measured bounce. Coming up into that target. Could go higher, but played out. ASML. Looking for this to come on up to the 1200 area now. This would be the new target. Right there. Light. At major resistance here. Can it keep going? Sure. They can always keep going. Yeah, if this went absolute bananas, 8,600. I expect it to stop at one of these, though. 342 would be a great place to turn around and retrace the roadmap line, but we can come on up to 1170. There's no, I make no preconceived notion on where it should stop. Fix, like we talked about, already over the ski tips, probably do a retrace. 1100, probably next upside. AVGO, if this is going to reach on up, 455. PRIM, probably going to come back down. ACLX. Now we're using a hammer drill on the concrete underneath me. Awesome. After the sledgehammer. So ACLX, probably going to retrace a little bit more. CLS. SanDisk. And all these look ripe for a pullback. So all these things that are crazy high. PWR, probably looking for 46 before we get a pullback. COHR, it's probably going to get a pullback. If we get a big pullback on the 10th, these things that are all looking pretty ridiculous are probably going to get sucked out a little bit. And things that have already bounced off the roadmap line have the opportunity to climb higher. So that one's set up for 788. GPCR. I think somebody was mentioning that. GPCR went up 83% today. There you go. Trading halted, although it's back on. So it's another therapeutics. Boom shakalaka. CRH. Already at the targets, like we talked about. ARWR. Man, that's going vertical. Watch out when they do this. Eventually, they usually take a retrace right back down. CTX, that's a reverse splitter. That's a pile of garbage. Yeah, that company can't keep their crap together. So horrible at managing share price. CMEX, Simtrex, excuse me, Simtrex, not CMEX, Simtrex. CFLT. Yeah, I wouldn't mess with that. MU do a retrace, but we could push on higher. 276, possibly even up to 415. I guess their exit from the consumer market was just a temporary step back, and then they're launching out. LABU, 3X on biotech. Looks like we're coming on up to 200 probably. 200, 220. And then TSM, probably due for a retrace to the roadmap line. Coinbase, the potential is there if we can break through the roadmap line, the 618, to go on out to new all-time highs up here in the 600, 700. Maybe even a bigger push out to 1300 if we really keep it together on crypto. AVAV sitting on the roadmap line, looking for that bounce above 351, be an entry for bigger pop up to 492 probably. Let's roll on down here and try to find some other opportunity. Hood, be very careful. We're in the resistance zone. We didn't just jump on through. We stopped cold right there. This is an entry for a pop up here, but it also might rip you. I'm just cautious about that one. Cautious. Marvel. Just chopping in here. Hadn't been able to break out. It did set up the entry for 146, but it just hasn't been able to get its crap together here. Ferrari. Man, I can feel that in the floor. Sorry that if anybody can hear that. Looking for that too. Pop on down. Boil. This is natural gas. Be careful there. Boil and UNG and cold just have problems. That looks, VRT looks like we're going to come on up to 211. That's a 4-hour bounce, not a daily bounce. UL, Unilever getting whacked. It's probably going to come down for a lower low. Something like move down, retrace, move down, back in. Yeah, we're close. This can bottom out somewhere right down in here and then turn for a massive move higher again. Setups for today, CG. They grab the lower bit right in here. Yeah, I probably wouldn't touch that one until it got much higher. See if we can pull up the statistics where we can see them. There we go. Pull that down just a hair. So 5 trades. Yeah, there's not much history there. CRM. And it's a downtrend with a bounce in it. This bounce may play out to 277, but it's still a downtrend. DIOD. Yeah, I can see that showing up on the sound too. So 62 target EWG. And here's the high, here's the low. And that hadn't quite triggered yet. JBL. Come on now. Got the high, got that low. There's the entry, 243. This one, reasonable, not the best, but reasonable. LFUS. There's the high, there's the low. Entry, 280. Reasonable, not great. MC is going to be the wrong one. Need this one. I'm sure it grabbed that lower high right there. I would wait for the bigger bounce, and that one, the numbers on that still don't look great. And this one's bounced quite a few times recently, so there's the entry, 21 target mRNA, and that shouldn't even be on the list. I wouldn't touch it. High low, there's the entry, 8440 PIPR. Here's the high, here's the low. Oh, that's the low. There's the entry, 38370. Bad numbers. This one entered from back here. And actually, technically, met the criteria here. Didn't stop it out, but here's a secondary entry, 5790. And Zeta has a bounce off of this lower. Be careful. This could turn on you. It entered back here on the tighter bounce, but here's another entry, 2146 target. Not my favorite. So none of those look super awesome today, even though they're all valid entries. ES. Now I can hear somebody climbing a ladder. Must be very noisy on the ladder. Or they got the ladder up against the floor right under me. And here's the high. Here's the potential pullback. So watch out. That's the big thing on the S&P for today. If we get a breakdown, can turn pretty nasty. If this came all the way down here if we got some sort of crazy flush out by FOMC, which is only like 2.5 days now, we got some crazy flush out in the next 2.5 days, brought us back down here, 200 points. We'll probably pop on FOMC, but right now it looks like we're gonna hang out, not do much into FOMC, and then get a pullback. That's what the charts are saying. So be careful out there. Be careful out there. We'll see you again tomorrow morning. Same bat time, same bat channel, 9:15 tomorrow. We'll hunt for opportunity. I'll be on Market Masters at 11. And yeah, it's a hammer drill right on the floor. I can feel it. Anyway, I'll see you later, everybody.